Hope I'm audible. Thank you for participating in today's webinar. My name is Chandandeep Kaur. Today we have with us Mr. Bikramjit Singh Bedi, Partner Taxation Delhi. Mr. Bikramjit brings 20 years of rich experience and industry knowledge in tax advisory and compliance services. He has advised multinational companies on tax structuring issues as well as handled tax litigation at various appellate levels and mutual agreement procedure proceedings. He has an excellent rapport with and has represented extensively before the Indian tax authorities. So our topic for today is recent tax developments sailing through COVID times. Please note that we shall be taking the questions at the end of the session. So all are requested to post their questions in the chat box. Now I would like to request Bikram sir to begin with the session. Over to you, sir.
Thank you, Chandan, for this crisp introduction, and it sets the tone for the session ahead. A very good morning to everyone, and welcome to this session, which has been aptly titled Recent Tax Developments Sailing Through COVID Times. As you all know that this pandemic has been changing everything about our life and work. We are all focused on how to best protect and support our families, colleagues, and the communities at large in the face of this unfolding crisis. Now, as we move cautiously through these extremely difficult and trying times with all our safety belts intact, the government has been working overtime to bring some cheer through much needed tax relief measures ever since the lockdown commenced in, say, mid of March. Now, although there have been many welcome changes in terms of extension of key due dates to June 30th, the TDS and TCS rates have been reduced by 25% in all cases, except for some salary and non-resident cases. There have been clarifications on the validity of 197 certificates, some relaxation of residency rules, instant PAN through Aadhaar, and the like. However, this session will deal with some other important changes, such as the very recently revamped Form 26AS and the new ITR Forms, the much touted Vivad Vishwas Scheme. And I would also be giving some quick pointers as to how the corporates can counter the ever-looming liquidity crisis. Next slide. So, as I've mentioned, the topics would cover 26AS, forms, the scheme, and liquidity management. Next, Chandan. To give a brief background, the Form 26AS was popularly known as the annual statement of taxes deducted and collected. And this was originally introduced during the financial year 2010-11. Now, this form has basically been serving the purpose of a consolidated tax statement, which one could access after logging into one's account on the income tax website. It contains some limited information such as tax deducted or collected at source, taxes paid, and any refund or any TDS defaults. In the recent budget in February, it emerged that with the current technological advances and bigger IT infrastructure of the tax department, now which is facilitating big data analytics and data mining too, there is a plethora of information now available with respect to numerous transactions of the SECs, including sale, purchase of immovable property, shares, etc., and that too on a real-time basis. So with an aim to make this form more comprehensive, detailed, and useful, both for tax department as well as for the taxpayers, a new Form 26AS was proposed to be brought out. Accordingly, a new section 285BB, that is annual financial statement, was inserted, paving the way for a revamped version of Form 26AS. Consequently, Section 203AA, which provided for the erstwhile Form 26AS, was deleted. Now, in line with the above, the CBDT has recently notified the truly, I would say, Atmanirbhar new avatar of Form 26AS, named as Annual Information Statement. They have inserted a new Rule 114I in place of the earlier Rule 31AB by the notification number 30 of May 28, 2020. This revised Form 26AS has come into effect from June 1st of this year. You would all see that by change in name itself, from Annual Statement of Taxes to Annual Information Statement, the intention of Tax Department is clearly evident for bringing much more information upfront as a complete profile of a taxpayer. Another radical change is that earlier, this form was to be uploaded by the Tax Department by July 31st on an annual basis. However, now the information is to be uploaded within 3 months from the end of the month in which the same was received by the tax authorities. Thus, this is a live 26AS, having a continuous process of collating, updating, and uploading of relevant data by the tax department. Moreover, it is important to note that abundant discretionary powers have been vested with tax officers now to upload information from any officer or authority under any other law or under any treaty or any other person. Please note the wide extent. And they can include all this information to the extent they deem it fit in the interest of the revenue. Thus, this is a very unique and wide power, giving ample authority to the tax department now to even treat on territories which are otherwise clearly outside their domain. And this could have far-reaching implications on the taxpayers. Next. Now, let's discuss some changes in the form itself. If you would see in the general part A, till now only the personal details such as the permanent account number, name, and the address of the taxpayers were provided. But lately, we all would have witnessed that the tax department is sending information to taxpayers via SMS and emails route also. So it seems that the mobile number and the email ID has been included, possibly for keeping the same up to date. And of course, the ever important Aadhaar number has also been included in this new form now. In the specific information part B, the Form 26AS used to mainly provide the details of taxes deducted and collected. Additionally, the details of taxes paid, whether advance tax or self-assessment tax, were also made available. Now, in addition to the above details, the Income Tax Department will provide the details of tax demands or refunds which are outstanding. Now, this information will come very handy to ascertain whether such demands are genuine or disputed, or in case any refunds need action. In case of disputed demands, one could easily avail the remedy of rectification or go to appeals within the prescribed time limits. The new form also provides for details of all pending income tax proceedings with the tax department, be it assessments or reassessments or revisions, appeals, etc., including the proceedings which have been completed during the year. Such information should now help the taxpayers to remain updated on the proceedings, and any lapse could be taken up well in time and rectified. Another very important inclusion is the enhanced information relating to the specified financial transactions or SFT of the taxpayer. As you may be aware that presently some entities such as banks, listed companies, mutual funds, registrars, stock exchanges, etc. are required to furnish details of various financial transactions beyond certain limits entered into with them to the tax department on an annual basis. In fact, our ABS team has been actively helping clients in this SFT filing process. Since this information is readily available with the Income Tax Department for all taxpayers, it is sought to be now made available through this Form 26AS also. This information would include payments made to banks for getting demand drafts or pay orders and cash deposited or withdrawn beyond certain limits. Similarly, transactions for credit cards, foreign exchange, purchase of shares, bonds, debentures, as has been reported by these specified entities for certain limits will also be reported. In case of sale and purchase of property, the registrar is required to furnish particulars of both a buyer and a seller in case stamp duty value of such immovable property exceeds to 30 lakh rupees. Now, this information would also get reflected in the 26AS form in case one has bought or sold any immovable property. So, the availability of all these additional details should help the taxpayers not only while filing their return of income, but also to verify and initiate corrective steps in case some of the information corrected is submitted is incorrect. Next slide. Now, as we have seen that the fresh version of Form 26AS will completely change the way it was looked upon and used by the taxpayers and also the tax department. This could lead to some implications which we have given below. There could be an increased risk of scrutiny or reopening of assessments. Please see that given the extent of information likely to be reported in this annual information statement, there could be a spurt in the issue of notices where the details declared by the taxpayers in their return of income does not match with this statement. It will also provide information to the authorities about the income or assets located outside India, and they could initiate action on this count too. Then linking of cases pending at various appellate forums. Now, as the tax authorities will be having adequate information of all the cases pending at various appellate authorities, they could easily correlate this information with the current year facts and are more likely to pass orders on similar lines. Another very important thing is that this could lead to having a comprehensive assessment proceeding. Since the tax authorities would be well equipped with all pending litigations and proceedings in different years and forums, it is more likely that all such proceedings would be inquired into now, even from an income tax perspective, to conduct a very detailed and relevant probe into the facts of each year. And now, of course, there is an easy access of information for various institutions. So going forward, this new form could act as an effective due diligence or a background check mechanism for banks, financial institutions, buyers, or any other authorities to verify any major lapses or issues of any person or corporates. So taxpayers would need to treat cautiously while providing information to banks, financial institutions, etc. about pending proceedings under any law or tax demands or disputes, as the government is trying to bring in more transparency in the public profile of taxpayer, making it tough for them to conceal or provide any incorrect information. Next. Yes, now we will talk a little about the new return forms. The CBDT has recently notified the income tax return forms 1 to 7 for the assessment year 2021 by the notification number 31 of May 29, 2020. With this notification, the CBDT has rolled back the earlier ITR 1 that is Sahaj and ITR 4 that is Sugam, which was issued in January and wherein it restricted the usage by high spenders and joint house owners, and this condition has been dispensed with now. Thus, the joint owner of any property can now file returns under ITR 1 or ITR 4. The Finance Act 2019 had amended section 139(1) to include furnishing of tax return by any person who has during the year incurred expenses on foreign travel of self or anyone else in excess of 2 lakhs, all electricity expenses exceeding rupees 1 lakhs, or made deposits exceeding rupees 1 crore in one or more current accounts with any bank. The new ITR incorporates the above and requires a complete disclosure on this regard. The new forms provide an option to disclose the PAN or Aadhaar in comparison to earlier mandatory requirements of quoting PAN. Next. Now you would also see that there is a drop-down utility which has been provided in ITR 6, which is a very comprehensive form for companies to now opt for the concessional tax regime of lower tax rates under 115BAA or 115BAB. Then there are changes with regard to multiple bank accounts for refunds. The ITR forms have for the first time permitted the taxpayer to select multiple bank accounts for refund credit as against the option of only one in the past. This should now take care of the bank account pre-validation issues which used to delay the refund remittance process. And yes, there is a new schedule D1 which has been specifically inserted to take into account the investments, deposits, or the payments made for claiming deduction under Chapter 6A, and any payment, acquisition, purchase, construction affected for claiming deductions against short-term and long-term capital gains during the extended deadline of April to June 2020, and which pertains to the last financial year, that is financial year 2019-20. So the above is just a glimpse of numerous changes which have been made on all the forms, especially corporate law, the tax related forms. And one can deduce that the CBDT is making a very serious attempt in gathering maximum information from the taxpayers. Now, for example, the taxpayers will be able to collect information on high spenders and the sale purchase transactions of shares, mutual funds, etc. in these return forms, and match the same with the comprehensive form 26As to check the genuineness of the information provided and call for more information wherever required through notices. In a way, the new return forms are now taking a form of a summary tax assessment of the taxpayer with so much readily available information on hand with the tax department. Having said this, considering that the due date of filing of all the tax returns has been extended to November 30th, the CBDT has done a commendable job in these difficult times too, allowing fairly reasonable time to the taxpayers for understanding, analyzing, and collating the humongous data required for proper and timely filing of the income tax return in the appropriate form. I would urge our respective teams from tax, ABS, and assurance divisions who are handling the tax returns of various of our clients to take out time and carefully go through the new forms to understand the intricacies involved therein. In fact, there is a 213-pager notification which has brought in all these changes. The e-filing facility is currently available only for ITR 1 and ITR 4 to the best of my knowledge, while for other ITRs, it should be available shortly. Next slide. Okay, now we come to a very important development which has been going over the past few months. To give you a brief introduction on this, during the budget 2020, riding on the success of the Sabka Vishwas Scheme to settle indirect tax disputes, the Vivad se Vishwas Scheme was announced to provide for a dispute resolution mechanism in respect of pending tax litigation, where approximately say 4.9 lakh cases involving disputed amounts of more than 9.32 lakh crores were pending at various appellate levels. Now, the Vivad se Vishwas bill was introduced in February, and after taking into account representation received from various stakeholders, the Direct Tax Vivad se Vishwas Act 2020 received the assent of the President of India in March of this year. Now, it is common experience that tax disputes consume enormous time, energy, resources, both on the part of the government as well as the taxpayers. Thus, there was an urgent need to have some fast track dispute resolution of pending tax disputes, which would not only benefit the government by generating their much needed timely revenues and avoid vexatious direct tax litigation, but also the taxpayers would now be able to deploy the time, the energy, the resources which have been saved by opting for such dispute resolution towards their core business activities. Next. Now, taking you through the key provisions of the scheme. Uh, Now, this scheme actually offers a very, very lucrative offer. And the major attraction remains that there is a complete waiver of interest and penalty if the disputed tax is paid on or before a stipulated date. It has been provided, earlier it was extended to June 30th. However, amid the COVID-19 outbreak and lockdown, the finance minister has announced extension of this date to December 31st, 2020 now. If the taxpayer is not able to pay within the deadline for any reasons and pays subsequently, he would have to pay 10% more of the tax. Of course, the exemption or the waiver of interest and penalty still remains, even if the payment is delayed. Now, in case if there is only interest and penalty which is in dispute, the taxpayer will have to pay only 25% of the disputed amount, and subsequently it would become 30%. Next. Okay, now going for the eligibility of the scheme, the cutoff date, for the applicability of the scheme is the pendency of appeals as on 31st of January 2020 in the following forums. So taking you very quickly through this, any appeal, writ petition, SLP, which is pending before the CIT appeals, the ITAT, which is a tribunal, the High Court or the Supreme Court, any order which has been passed by the assessing officer or any other appellate forum, and the time limit for filing this appeal is not yet expired as on 31st January 2020. Objections have been filed with the DRP, but no direction has been issued by DRP on as on 31st January are also covered. Or even if directions have been issued, but the AO has not yet passed an assessment order before 31st of January, these would also be covered. And of course, a person who has filed an application for revision under section 264 and such application is pending as on 31st January 2020. So the key point is and would remain that there has to be pendency of appeals or even the time limits for filing appeals as on January 31st, 2020. Next. To the next slide. Yeah. There are certain people who are not eligible for the scheme. Basically, these are some search cases wherein the disputed tax demand is more than 5 crore rupees, prosecution proceedings, undisclosed income or undisclosed assets from sources or assets located outside India, assessment or reassessment which is made on basis of information received under the tax treaties, then some order of detentions in the case of Foreign Exchange and Smuggling Act, then some prosecutions under the narcotic drugs and all those. So these cases are not eligible. Next. Now briefly going through the procedure of the scheme, the taxpayer is to e-file the declaration indicating the disputed appeals. The designated income tax authority is then required to issue a certificate determining the amount payable by the taxpayer within a period of 15 days of filing of this declaration. The taxpayer will then withdraw the appeals after receiving the certificate. He will then withdraw the appeals from the appellate forums and then pay the amount which is specified within 15 days. The proof of the above withdrawal and the intimation of payment is to be then filed with the designated income tax authorities in the prescribed form, who shall then pass an order stating that the assessee has paid the amount. Please note that the order which is being passed by the designated income tax authority shall be conclusive and no matter shall be reopened in any other proceedings of the Income Tax Act. Next. As I've already given you that, in cases involving disputed tax, interest and penalty, one has to only pay 100% of disputed tax with a waiver on the interest and penalty, which is quite attractive. And where the tax arrears are related to only disputed interest or disputed penalty, then the amount is reduced to 25% and in case of delay to 30%. Next. Quickly, I mean, time is short, but I'll take you through some technical aspects, of this scheme also. You would see that if the amount paid by taxpayer before filing the declaration, it exceeds the amount payable under the scheme, the taxpayer would be granted the refund, but without the interest on such refund. Now, in cases where return loss has been reduced in assessment, he has an option to either pay notional tax on the reduced loss and carry forward, or pay nothing and then forget about the loss. The resolution needs to be applied on an order by order basis, on a year-to-year basis. The assessee or department cannot claim that the taxpayer or the department has conceded the tax position by settling the dispute under this scheme in any other proceedings or of the litigation. Now, matters for which application has been filed for rectification of mistakes will get immunity only once the rectification order has been passed. Next. If I would, point out that there have been about 55 FAQs which has been issued, which is the updated notification of April 22nd of this year, and the CBDT has done extensive made extensive effort to bring out a lot of clarifications on this part. I will just take you through a few ones just to bring you online with that. An order which is set aside by an appellate authority is also eligible for the scheme. Now, in case where a draft assessment order is passed before January 31st, 2020, if the assessee opts to file an appeal with the CITP, the same is covered under the scheme, although final assessment order will be passed post January 31st, 2020. Now, the scheme is not available for disputes pending before the authority or for advance ruling. However, if the advance ruling has passed an order and a writ petition against such order is pending in the High Court, the appellant is eligible for this scheme. Next. Now, if tax arrears include tax on issues excluded from the scheme, such case will not be eligible to file a declaration. In case both quantum appeal and appeal against penalty in relation to issues under quantum appeal are pending, then declaration should be filed in relation to both disputed tax appeal and penalty appeal. However, it is important to note that the appellant cannot apply for settlement of penalty appeal alone when the quantum is still pending. Amount which is paid under the scheme after acceptance shall not be refundable under any circumstance. This is harsh. The tax determined by the department cannot be contested by the taxpayer with any forum, whether Supreme Court, High Court or ITAT. The declaration would be null and void where the payment is not made due to financial difficulties post acceptance of the scheme. So now basically we have seen that the government has been ambitiously pushing for the success of this scheme, and it has even gone to the extent of making this a key performance indicator for the tax officers, which will determine their prospects and future posting too. Very strange. But the taxpayer would still require to undertake a proper cost benefit analysis before he comes to a conclusion whether to go or not to go for the scheme. For taxpayers having less chances of success, this scheme could definitely provide a complete waiver of interest and penalty which typically equals the tax arrears in some cases. This could be a one-time opportunity to clean up the balance sheets, which are saddled with contingent liabilities and provisions for disputed amounts. And as rightly said by Abraham Lincoln, discourage litigation, persuade your neighbors wherever you can. Next. Okay. Now, this is an important one before I conclude. Now, in this extremely pressing time, where you have seen that businesses are actually fighting for survival, while some others are trying to cope up with this unprecedented adverse situation created by COVID-19, the financial liquidity aspect remains a prime concern. In this situation, one would tend to explore all the options available, short, medium, or long term, to somehow ease the liquidity crunch and create more cash reserves for meeting the business needs. In this light, we will be briefly highlighting some possible avenues for meeting the above objective. Next. The first option I would say would be low withholding certificate under 197. As you know that there could be situations wherein the taxpayers have outstanding tax refunds in the earlier previous years on account of excessive TDS, or possibly now going forward due to COVID, there could be situations of lower profits and losses. So in such a situation, to avoid getting into a loop of getting more withholding of taxes and then ending up having more tax refunds, one could explore the opportunity of applying for a low withholding tax certificate and aim to get a nil or maybe a lower withholding on the income or the on the revenues which it has which it is expected to receive in the current year. Tax refunds, another important one. This is actually the excess payment of tax than the actual tax liability, and the processing have been done by the CPC. Recently, the tax department has issued that all pending tax refunds up to 5 lakhs to individuals and business entities should be given. Now, we can actually try to obtain the tax refunds on a fast track mode by filing applications and by coordinating with the tax department. And this could also ease off the liquidity crunch to much an extent. Next. Yeah, this is a new one, which has not been explored by many, but yes, now the need may arise. There is a Rule 33 in the rules, which actually says that the tax officer can grant relaxation from monthly payments of TDS to quarterly payments of TDS for certain type of payments, such as for salaries, some interest, some commission. Now, in these difficult times, this could be a very good opportunity to preserve liquidity for business operations if one can apply to the tax officers and convince them that there is a requirement for deferring the payments from a monthly to a quarterly. And depending on the amounts, the quantums involved, how much you can leverage on the cost, one can then file applications and go for this one also. The last one on this is the Concessional Tax Regime under Section 115BAA. As you know that from the financial year 1920, there has been an option for domestic companies to pay tax at lower. It's about 22, which becomes effectively 25% if domestic companies comply with other conditions specified. So one can analyze the financials for various years and do a comparative analysis for estimating the tax liability for each year, considering that both the existing and the concessional rates are quite different, and there could be a big savings on the tax outgo on this part. So accordingly, one can then decide and then take the option forward. Okay, now this brings me to the end of the presentation, and I really hope the participants would have found the same useful. Thank you everyone for your patient listening, and now hand over to Chandan.
Chandan, please unmute yourself.
Hello. Yeah, sorry, there was some connectivity issue. So thank you, sir. Thank you for such a wonderful and insightful session. It was really a valuable running experience. So let's move forward to Q&A round. We have till now few questions. Just a minute. We have a question from Trinath Panda. He says, what are the relaxations given to individual and company in the new tax reform other than reduction in TDS rate?
This is a good one. See, the relaxations right now, which has been given to individual and company, these are relaxations as such. We have already the return filing due dates have been increased, giving you much more time on this. And in case if you are able to also go for the concessional tax regimes, that is something which is important, and one needs to see both from an individual as a company and from a company perspective. In case if you can forego any deductions, exemptions, and try to take benefit of the same.
Okay, thank you, sir. Next is from Udit Jain. He says, as we know that the time limit for LTDC, lower tax deduction certificate, has been increased,
Yeah.
but in case where the LTDC certificate limit has already been exhausted, so can we deduct TDS on lower rate, or we should deduct the TDS at actual rate?
No, see, now, we have the option, because earlier there was, in March, there have been some circulars in this regard, which clarified that in case you have a lower withholding tax certificate as on 31st March of 2020, that lower certificate for the previous year could be applied in the next year too. And then there was an option that now, and that was actually applicable till 30th June. So there was an option that you should obtain a new certificate, apply for it, and then obtain it by 30th of June. So in case if we already have applied, then we should get the new certificate, new rate, and apply according to that. Otherwise, even till 30th June, the older rate, which is applicable on the similar transaction, would be applicable for this year at least till 30th June.
All right. Next is from Vipul sir. He says, since departments are closed to public dealings as of now, how are we proceeding with the renewal of TRC for financial year 2021 of any Indian company?
Well, the public dealings are off as of now, but there is no stopping us from intimating the tax officers through their official email IDs. And this is the way our entire tax team has been dealing. In fact, for your information, we have even, on very emergency basis, started visiting tax office. They do not stop the entry in case if you are able to contact the tax officer. So in these cases, we are firstly putting in emails to the official email address of the officer concerned. And thereafter, of course, we have to then follow up through telephone, and wherever required in the coming few days, I think emergency or need based, one can even visit the tax office.
Great. Thank you, sir. I don't see any further questions now, and I think we are well in time. So I think we should conclude this session now. If any question remain unanswered, or if anyone have any questions, we have another question. We will take the last question and then we'll conclude. This is from Mr. Pankaj. Whether complexities in obtaining lower withholding tax certificate will increase due to COVID, as profit would be lower?
No, Pankaj, in fact, I would say that this is a good time now to take the sentiments of the government, wherein, on one side, the finance minister is trying to bring in many measures, to give relief to the taxpayer in terms of reduced tax, withholding tax rates and all. So now this is also a time that one can actually go and put up a good case before the tax officer that we do require a lower withholding certificate, because more tax outgo would definitely hamper the liquidity position of the company. So in my view, it would be in fact a boon for us if we go now and take up this case on a strong basis.
Okay. Thank you, sir. Thank you for answering all the questions. So now we will conclude the session. And if anyone has any question unanswered, so you may write to SETD or to the tax team directly. We would try to answer each of them individually via email. Thank you so much. Thank you, sir.
Thank you, Chandan. Thank you, all of you, and have a very, very safe day and a weekend ahead. Thank you, everyone.
Thank you, sir. Bye-bye, everyone.